Welcome to all of my students in today's mentoring session. As usual, we'll be starting today's mentoring session with weekly sectoral analysis. And first, I'll be starting with Nifty and we'll be going on towards the mid-cap index in the last. And all of you know that I generally analyze with the higher time frames first, then I'll be going from monthly to weekly to daily. So that is the order which we'll be taking in the different indexes. Now, if you check properly in the monthly time frame of Nifty futures, what we can see is trend is obviously up. We can see almost two consecutive candles in the previous month and last month, which were shooting star candles, by the way. And this particular candle is yet not complete. So overall, what we can see is there is selling pressure at higher levels, which is at 18,400 and possibly around 18,600 levels, right? And prices are overstretched in the monthly time frame. We can see RSI is even near 75 levels. In the weekly chart, what we can see, trend is absolutely flat. This particular candle which we saw over here was a high wave candle. Generally, high wave candles are more powerful when we see them at the bottom of a trend or a top of the trend, but this is somewhere in between, so it's very difficult to judge what this particular candle is trying to tell us. But nevertheless, yes, it is for sure that the trend is absolutely flat, and what we can see is this particular candle is looking like a hammer, although hammer is also very powerful if it is made at the bottom of a trend. But yes, it has been made at a decent support band which is able to hold on since last 3 weeks. So this is a good sign for the bulls, but we need to also cross check in the daily chart. Now in the daily chart, all of you can clearly see that overall market is still choppy. It is still range bound. On the upside, I think it's within 17,630 on the extreme high range, and then the low side it is somewhere around 16,850. And if you can see, few days have been extremely choppy. All right, and especially this area does contain a lot of resistance. You can see these 2 days back to back have not been able to touch even this particular higher end of this entire resistance band. Why? The reason is this particular POC, which is called the point of control of the volume profile indicator. This is providing a lot of resistance, and currently the trend in the daily time frame is absolutely flat. There is no trend on the downside, neither on the upside, and until and unless, according to my analysis, we do not close and sustain above 17,800 or 17,850, I think it is going to be very difficult for the bulls to hold on to the rallies which are happening. And the reason for this is, if you cross check the volume, because in my Nifty short-term view, which I've been making recently, I have been saying the same thing. If you see, when the market is going up in last 4 days, if you see market has been closing in the green territory, volumes have been coming down. All right. And this is not a good sign. Plus, we are still at a resistance. No doubt we have been able to pull back with at least 2 big gap ups. And from 16,950, we have been able to rally till 17,588 or something. Yes, this is a short-term decent rally. I do not deny that. But the volumes are coming down. This is even also something which you should take in notice. So once again, until and unless we don't close above 17,800, 17,850, things are still stuck in a range. So you have to be very, very careful while you are taking any trades. In the bank Nifty, what we can see in the monthly time frame, let's check that. Let's check that first. In the monthly time frame, what we can see, extreme big candle, which is a shooting star, and then a very big candle, which is a bearish bell toll, and this is a sign that there is some sort of selling pressure at the higher levels. Trend is still up in the monthly time frame. In the weekly time frame, what we can see, the previous day's candle, this one is sort of high wave candle, sort of, but if you check properly, if this particular real body would have been little bit more squeezed, it would look like a doji. And this particular candle is looking like a hammer. It is not exactly a hammer because the reason is the lower shadow. This lower shadow is not long enough to call it a hammer, because if it was a hammer, I think the lower shadow should have been bigger. So it is more or less still a spinning top, which clearly shows that banking index itself doesn't know what it should be doing in the short term. It is still stuck within the range. You can see this is the lower range of the support band. This is a higher range of the support band. And over here we have a resistance band. So in the weekly chart also, it is in the flat trend basically. And in the daily chart, if you check properly, it is the same scenario. Yes, we have seen a decent bounce back. I am not saying no, but we need to cross this particular resistance level, and then we'll be testing. If we are able to close above this, say 37,630 or 37,650, might be this relief rally would stretch till 38,180 or something, but we will need to cross even this trend line, and then might be, we could say that things are looking better now, because we should not forget, if you look this correction, this is very steep correction. If you compare this with say PSU Bank, not in PSU Bank, let's compare it with Nifty. Nifty has not gone one way down. It has gone like, it's gone down, gave a pullback, came down, gave a pullback, and then again it's going up. Bank Nifty is little bit straighter, so it's little bit more weaker. So you'll have to be very, very careful when you are trading on the banks. All right. And if we compare the private banks and the PSU banks, I don't think so that I need to tell you, you can see it yourself that PSU banks are looking much powerful than the private banks, because first of all, the private banks have fallen much steeper and with a larger volatility. Plus this pullback is much smaller. This pullback is much smaller in comparison to the pullback which we have seen in the PSU banks. All right. So overall, I think PSU banks have now started showing strength. So let's go and check SBI. I think SBI looks okay. It looks fine. And according to me, possibly if you are able to close above 500 levels, that will be the first sign that the stock is getting revived, and the second close possibly above 510. So 500 to 510 is a decent resistance band for the stock. If you are able to close above that, maybe things will be better for the stock. You need to keep a watch on it. And if you cross check, this is one more thing which you need to check. This pullback which has happened, 1, 2, 3, okay, this is the red candle. Even if I take this into consideration, if I take these 4 days, you can see very, very clearly the volume has come down over here. So you have to be very careful, my friends, before you initiate any trades. Metal pack. Metal pack, let's open the weekly chart. You can see that the price has taken support from this previous week. If you can see this particular candle's low, it's giving support to this candle, and then it has been able to pull back. The current trend in the weekly chart, according to me, is absolutely flat. In the daily chart also, still after such a big pullback, it is still flat according to me. Until and unless we don't close above this particular trend line resistance and also this small resistance band, I think so things will be a little bit jittery for the index. Once we start trading above 58.50 or 58.60 and close above it with a closing basis scenario, then maybe things will be a little bit better for the metal pack. And do not forget that we are still overstretched over here. Trend, yes, I do not deny trend is still up, but you need to be careful and keep this particular zone in your mind. All right. Auto pack. Auto pack, you can clearly see there has been a sharp bounce back thanks to this bullish harami pattern, which has been able to give a very strong pullback. But if you check properly, there is a small gap over here, which is providing some sort of resistance to the auto pack. And if you check properly over here, the pullback which has come from a very strong point, because this is the previous high, this is also a previous high. This is very far from this particular candle, but I still consider this. So it is coming out of a very powerful area. If we consolidate, I believe if we consolidate, I'm not saying that it should happen. I'm saying if it happens that we consolidate for a few more days, and if then the auto index starts going up, then maybe things will be fine. But if we close below this particular candle, then again things will be worst for the index and you'll see prices going down. So you'll have to wait and watch and see what happens. More or less, I think all the indexes are currently at a juncture when you need to be very careful and watchful rather than, just going ahead and taking trades. Thanks to the support band in IT pack, you can see the IT pack has been able to hold itself pretty confidently. But as I said, overall, the trend is up in the weekly chart. I don't deny that. But if you see properly, because you know what happens when we see the weekly chart, the higher time frame properly, things get very clear. If you see overall, IT pack is just consolidating. Nothing is happening. Actually, nothing is happening. So if you want this to change and some sort of momentum, then as I said last time, this particular level needs to be taken off. On closing basis, finance pack, I think it's completely range bound. It is stuck within a resistance band and a support band. So as of now, I have nothing to say about the finance pack. You can see this is a high wave candle, and this is also sort of a spinning top. So it seems the index itself is confused and it doesn't know where it wants to go. Possibly once we start closing above this particular resistance band, then maybe things will be a little bit better. So trade as less as possible in this pack as it is stuck within the range, and let the market tell you, let the price tell you where it wants to go. Pharma pack, if you open the weekly chart, this was a very good candle which did happen a couple of weeks back because this candle did come up at a 50% retracement, and it also came at an area where you can see a previous high. Then we saw a very big red candle, and once again we can see a dragonfly doji. Now this candle is actually more powerful than even this particular candle because this is a dragonfly doji, and dragonfly dojis are exceptionally powerful candles. But if you see over here, there is one more dragonfly doji candle over here, one more candle. But somehow I don't know what has happened today. Some sort of selling pressure did occur in the last moment. There is some sort of space left on the upside, according to me, for the pullback. I think you need to keep your eyes on Sun Pharma. Okay. The reason for that is it has given a lower low close over here, and it has been able to give a higher low close in RSI. So it is a potential candidate for a pullback. But if you want to see a very big move, then it will need to surpass this 781 to 790 band. If you can see, there is a lot of wicks which are around here. So this will work as a potential resistance zone. Once we see something moving above it, closing above it, then maybe things can improve. FMCG pack is looking much interesting than all other sectors, and the reason is the way it is displaying the strength. It seems that maybe, it's just a maybe, the time of the consolidation for the FMCG pack might be coming to an end. Max to max, maybe 1 or 2 weeks more, but there is a possibility of a decent move. You can see this high wave candle over here coming at a decent support band. This is not a very strong support band. This is a strong support band, but the kind of candles which are coming up over here, the kind of response which price is giving to the support band, because you can clearly see this support band. If you compare this support band with this one, this support band is much stronger. But even at a weaker support band, the way market is reacting, it shows that there is inherent bullishness. And even you can see there's a bullish harami candle over here. So you need to keep your eyes open, and you need to consistently keep watching the FMCG stocks. In case if there is a bullish move or something, then you can start participating in the FMCG pack, because if it does go up, I think it will go up due to its own bullishness. There will be nothing to do due to the entire market going up. If entire market goes up and then FMCG is also participating, that will be icing on the cake. But taking FMCG apart from the entire market, it still does show a lot of power in itself. So keep your eyes, extremely locked onto this particular sector. Realty pack. Now, realty pack has been one pack which has given a whipsaw on this particular day, which is 29th November. It went all the way down, broke the support, but did not close below it. And now the prices are going higher. So overall, even realty pack looks good. If you want to check on any stocks, you can check DLF. DLF is looking okay. And one more stock which looks good to me is also the IB Real Estate. So DLF and IB Real Estate, these two stocks you need to keep watch on. All right. These two stocks are showing a lot of strength, but we need to see further up move coming up if the follow through buying comes up, because you know the overall market is extremely choppy. Sometimes what will happen is we'll have a very big candle and suddenly the next day we'll have a very big red candle. That should not happen. So if the follow through buying comes in and the momentum keeps on rising, then I think you should take positions in DLF and IB Real Estate. But again, I think I have told this in one of my Nifty short-term views in last week also, whatever you trade, be careful that you deploy 50% less position sizing. Just because I feel something is bullish or something is bearish, it doesn't take away the fact that overall market is still choppy. Okay. And my style of trading is not that I'm extremely a stock specific person. I am a person who will first look at the index, then I will look at the sectoral index, and then I will go and pinpoint to the stock. So in entire market, if I'm finding 2 or 3 stocks or something to trade in my entire list, actually speaking, then it is not a very good scenario. I would love to trade when many sectors, many stocks are going up, and then I'm thinking that I have a limited amount of fund, which particular stock I should buy and which particular stock I should avoid. That is the best time to trade. Probability of making money at that point of time is extremely high. So don't forget this. Consumption index. Consumption index, I think if you see the weekly chart, once again, it has been able to pull back itself from a decent support band. We have a doji and we have a hammer. And if you look at the monthly time frame chart, there are 2 very large shooting stars candle which have been made in the last month. So yes, this is a decent pullback, but I think once we start trading above 7290 or maybe even 7300, things will show its true color. That is it just a pullback or actually price is serious to go higher and cross this particular high. All right. So 7300 or 7295, this particular level you need to keep in your mind. Mid cap index. Now, mid cap index, what has happened? It has been able to pull back itself from a very decent support. Okay, so this is the 127.20% extension. So this particular support is not very strong support. This is a decent support as per the daily chart. But the matter of fact, the pullback, the way it has happened, it is very steep. So this is a promising thing. But if you want to see follow through buying coming up, then I think so. You need to be seeing that this particular level should be taken off. If this level is not taken off, then I don't think this pullback will make much sense. The reason for that is very, very simple. If you can see over here, this is the first high. This is the first rally. This is, you can see a little bit of profit booking, and then again prices rise. So as per Dow theory, this particular high should have been above this, and we should have had a higher low somewhere over here, which did not happen. Instead of that, what we saw, a lower high, which is lower than this previous one, and then prices went down and it closed below this particular low. So as per Dow theory, we are still in a downtrend. So that is the reason why I'm saying we need to surpass this particular high. If we do that, then maybe things will change. So don't forget that. And in the last, summing up it up all, that overall Nifty is still range bound. And if you want to see a large rally happening in the market, then Nifty futures will need to surpass first this particular band, and then the 17,800 to 17,850. We need to close above that, sustain above it couple of days, and then maybe we'll see follow through buying coming up. If you get any trades in next few days, see what happens is, if you don't trade at all and if the market just takes off, you'll be completely left out. And if you take too much trades and if market continues to chop around between the range, you will see a lot of stop losses happening. So the best way is, I think, be vigilant and be nimble footed and initiate only high probable trades. Look at the sectoral indices and see properly that if a breakout is occurring, is it that that particular breakout is only happening in that particular stock and the entire sector is totally quiet? If the answer is yes, even if the sectoral indices is not looking great, as a person, as a trader, I would not participate in that. But if the entire sectoral indices are improving, and then if you see out of 6 stocks, at least 3 to 4 are showing good signs. So out of that 3, 4, maybe you can pick 1 or 2. And again, I would suggest you, deploy 50% less position sizing. If you don't make money in few trades, it won't matter, because market has given you a wonderful rally in last 2 years. And I'm pretty sure all of you have made a lot of money. So if you don't make money in maybe 1 or 2 trades, it doesn't matter. As soon as the resistance gets surpassed in the Nifty futures and entire market start participating, you can again come back to your entire position sizing quota. All right. So I hope this educational video has helped you, and especially people who are watching it on YouTube. When I upload it on YouTube, try to share with other traders, and so it can help others to understand what's the state of the trend of market right now. Thank you.